So I followed, I looked at Brent's videos and all that. So I do have a few more questions. So that's why I was able to, I was able to book this meeting with you.
Okay, so you heard a little bit about it, and then you started down the rabbit hole on your own a little bit. It sounds like. Have you watched Brent's full 90-minute presentation on infinite banking yet?
Yes, it was like I think how many videos were there? I think there was like 5 or something like that.
Okay, well, he's got one full 90-minute one, and then he has them broken up into smaller, like bite-sized chunks as well.
Yes, the whole thing, correct.
Okay, so you've seen the whole thing, the whole caboodle, and yeah, it's pretty common still. People have some questions around, infinite banking itself and how it works, and then they may even have questions of like, okay, well, I want to start my own bank. How does that work, or what are the next steps? So why don't we just give you the floor, and I'll let you ask your questions, and we'll try to help create clarity around any of those areas that you're have questions about.
Yes, absolutely. So my first question is, I already have an existing life insurance. It's through AIL, American Income Life. It's a sister company of Globe Life. I've had it for 6 years. I think I was written up like 100,000. Cash value is it's very meager. There's not much in there. I think the last time I checked, it must have been like maybe 1,500, 2,000. So
okay. Yeah, that's not designed. It doesn't sound like an infinite banking policy for 6 years, $1,500.
Yeah, I also did. I worked for them for a few years, and obviously, it's not designed for that. So, do I have to transfer my existing life insurance with you guys if I wanted to move forward, or do I have to start all over?
Well, is that a term policy, or that's actually a whole life policy?
Yeah, whole life. I do also have a term, but can't really do much with the term, so it's just the whole life that I'm.
Do you remember what the death benefit is? 100,000. Was that the original face amount?
Yes. Yeah.
And is it still at 100,000, or is it grown beyond that?
I was signed up for 100,000, and this was when I was 30 years old, so that was like 6 years ago.
Okay, so 6 years ago. And how much are you paying for that premium on that policy?
I believe it's like $113 or something like that, a little over 100 every month.
Okay, a little over 100 every month. Okay, so pretty small policy. That's probably too small. So you're 36 now, is that right?
Yeah.
Okay, so that's probably too small even for utilizing an infinite banking type of policy. So yeah, mixed feelings about it, because there is insurance there. It has vested over a number of years, and whole life policies themselves just do, given enough time, like 30 more years when you're likely to die, they tend to do pretty well, even if they're set up really poorly, just because the product is so amazing. Obviously, setting it up and designing it with the infinite banking concept in mind, you can get that cash growth and accumulation going a whole lot faster. But that's one I'm kind of indifferent on. It's a small enough, like $100 a month. I don't know, maybe you barely miss that even. And it is starting to get some cash value in it. It's very small. I mean, if there was like a significant amount of cash in there, and it was a newer policy, but designed that way, there probably still wouldn't be that much cash in it. 1035 exchange in it's not really going to make much of an impact on a new policy. So I don't know. What are your thoughts or your feelings around it, or what were you thinking you would like to do?
I was under the impression that maybe I can transfer it over, that maybe I can use it somehow, but maybe I'm wrong.
Well, you can, like I said, so you can do what's called a 1035 exchange. You wouldn't want to do this anyways until your new policy is in force, which is typically going to be several months from whatever date we start working on getting that in place, because you wouldn't want to be without insurance completely during that time frame. But then whatever cash value's in there, we could ask to do a 1035 exchange. We need to know what that amount is before yours is issued, and then you could sort of shut that policy down and then transfer whatever cash value is into this new policy to have extra cash value and buy more death benefit and have that available as well. But given it's such a small one way or the other, whether we do that or not, the other option is to just shut that policy down and take because I'm sure you haven't paid as much into the policy in 6 years as the cash value, so there's not going to be any tax penalties or anything like that if you just say, hey, I want to forfeit the policy, and they'll just send you a check for the amount of the cash value that's in there. So those are both options, or just keeping it. Like I said, it's 30 years from now, it's going to do pretty good, but it's going to take a while down the road to get there. But that's why I said I'm kind of like leaning both. I can see cases for both. Keeping it because you have been had it for 6 years now, so it's vested. It's got some good legs underneath it at this point. Yeah. But at the same time, there's not really much cash value in there. It's certainly not designed for the infinite banking system, and so like I said, I can really see a case for either one. What were your thoughts, or what were you kind of leaning toward thinking you wanted to do with that?
Well, if that's the case, I think I'll just leave it. I'll just leave it alone. There's no it's not bad having like multiple life insurances. I guess I would just have to start it. I think I would just have to start it with infinite banking as separate. So for that though, do I manually deposit money, or can I plug in a direct deposit into this? So it's pretty much like a new bank account, right? Like a new checking and savings. Can I plug in a direct deposit, or do I manually deposit money?
Either one of those are options. So, okay. And you can, and when you start your bank, when you determine what you want to start funding or committing to building your bank with on an annual or monthly basis, you can make those deposits, annually, semi-annually, quarterly, monthly, and you can change that election every year on your anniversary date as well. So just from a strategy standpoint, depending on what the person's purpose is or what they're wanting to do with it, they're wanting to use a lot of the banking aspects right away, and they've got like a little pile or pool of money sitting somewhere that's not doing anything. They might elect that first year that I'm just going to do that annual premium, pay the whole thing now, so 30 days from now I can start utilizing as much of that cash value as possible for myself for the banking aspects. And then maybe year two, they might say, you know what, I'd rather fit this in more into my monthly budget, and so elect to switch to monthly payments, and it'll just keep growing that bank at that way instead. So it just is good to know that you have those different options.
Okay, so what is the cap? What is like the yearly cap? Do I determine that from the very beginning, or can I just deposit like $1,000 each and every month and then just use it up to how much money I have in there, right? Like I don't have like a credit card with this where I can just, it has to be the amount that's in the account. That's only
right. You want to avoid, and we keep really close eye on that. So you'll tell us like, this is how much I want to commit, to initially to this my first bank, and you won't be able to stuff in any more than that, in that given year, because we don't want to get into a situation where we start approaching what are called the MEC limits, where that stands for a modified endowment contract, where, we know what we're doing this for the cash growth and accumulation and constant compounding, even while you're using that money somewhere else, kind of double dipping, getting a return in two different places at once. But the IRS started to get a little wise to this as well, and they realized, like, hey, some of these people, I don't think that their entire or main motivation is really for the life insurance. We think people are trying to use this as an investment vehicle. Okay, well, yeah, guilty. But so they put some caps or some limits, and so if you try to stuff too much cash or extra money into these policies, it will exceed that certain limit. And like I said, we keep very close watch on this for our clients, so we won't ever let you do this because then the IRS, if you pass those limits, if you're ever to do that, then they'll say, oh, wait a minute, no, you're using this as an investment vehicle, therefore we're going to tax you on all the growth, interest and dividends and everything inside of there. And that's what we want to eliminate entirely, right? Because our goal is to get as many as our dollars as we possibly can into a tax-free environment, and just get the government the heck out of our hair as best as we can.
Yeah. Okay. So I can commit to $1,000 each and every month, and then let's say like 6 months later, I have 6,000 in it. I mean, like maybe 5,500, let's say, and then I can use up to 5,500, pretty much.
Yeah, that cash value. Yes, exactly.
Okay, so I get the immediate cash value. Got it. And how do I pay my mortgage, rent, my credit card with this? How do I do that? Do I just set it up to where it's gonna get from the checking account, the bank's checking account, and then that's gonna pay for my credit card and my mortgage and all that? Is that how I set that up?
Yeah, you have an idea of a budget, so you're just going to cycle your money. Just add one more step to everything that you're doing. So basically, a lot of people will get to where all of their income, and Nelson Mash in his book, Becoming Your Own Banker, talked about where ultimately, as you grow your own banking system, this won't happen right away. Keep in mind, Victoria, Brent, I'm sure, talked about that in his presentation. He always does, about how this is a marathon, not a sprint, not a get-rich-quick scheme. So it's something we're working toward, but, eventually you can see a point someday where you've got a big enough banking system that basically your amount of premium every year equals your income. So your paycheck goes straight into your bank to pay your premiums, and then you take out the amount out of the cash value every month to cover all your bills and your budget. And so you are going to have a little bit of a transfer from your private bank into a bank, just from a practical standpoint, so that you can write checks and you can use credit cards and pay the credit cards from the amount that you put into Wells Fargo, just from a practical standpoint. So you'll still be utilizing real banks in that sense, just because you'll have to do that from a kind of practical standpoint. And that's something that when we get to that point, we decide we want to start putting this bank together here. We'll gather a little bit of information from you here today and send that over to our application team. And sometime in the next week, they'll reach out to you, usually by text or email. So you just want to keep an eye out for a phone number or an email that doesn't look familiar, or you don't recognize, because it very well could be somebody on our application team. And then they'll see about scheduling a time at a mutually agreeable time at your convenience, where they can go through that application. They'll make it as easy as possible on you by asking you the questions, so you don't get a huge stack of forms that you have to try to slog through and fill out by hand yourself. And once they get that application done, they're going to have you pee in a cup and draw a little blood and just make sure you look as beautiful on the inside as you do on the outside. And then that'll take typically around 4 or 5 weeks. then they'll get that sent over to the underwriting team, and then they'll start digging through your application and all the information they got in those paramed exams. And if everything goes smoothly, and you're relatively young, so that usually means it'll go a little faster than somebody that's 79. Probably another 4 or 5 weeks. At that point, they will say, yes, we approve, and we want to issue a policy on Victoria and offer her this insurance contract, and they'll send it to you for your review and approval. And when you get that signed and get that funded, it'll go in force. And then somebody from our Money Multiplier mapping team will reach out to you, and they'll work with you gathering up, all your debts and expenses, and start teaching you how to use your current debts and expenses to start growing your wealth by utilizing your bank. And they'll help you with the practical aspects of all this. It's kind of hard for me to gauge that, not knowing all of your debts and expenses going on in your life, as far as what the practical, details of how to move money here and there and pay your mortgage and when. But that's what they'll go through with you when they create that map with you. Then they'll sit down with you and help you determine what's the most efficient, effective way to be using your banking system. And that's not a one-time document that's designed to last the rest of your life, because you'll be buying things and selling things, or getting a new car or getting rid of an old car, and so you'll want to meet with them 2 or 3 times a year, ideally, to update and modify your Money Multiplier map for yourself, so it's always the most accurate and up to date, and so you can be as efficient with it as possible. And then within about 30 days of it going in force, so you can see the timeline, ideally you'll have already met with your money mapping specialist and have that mapped out, have that conversation. And so about 30-ish days or so after the policy is in force, then that cash value will be accessible to you to start using for the banking aspects and so forth.
Nice. Okay. So are there any monthly fees to this?
There's not, other than your straight premium. So you'll never pay the Money Multiplier, or myself or Brent or anybody on our team anything. We get paid the same way your car insurance guy gets paid, or your homeowner's insurance guy gets paid. We get paid directly from the insurance company only when a policy goes in force. We just provide all this extra service because we feel like we're on a mission, educating, teaching people about this banking system and how to control more of their own money, and how to recycle, reuse, and keep more of the dollars that they earn inside their family, and stop having them leak and disappear outside of their control to fund other people's lives and their goals. And a lot of people are new to this, so they kind of need a little hand holding in the beginning. 3 or 4 or 5 years from now, you may have used your own bank enough that you feel pretty comfortable and confident. But if you're like most people, initially in the beginning, you'll really like and appreciate having somebody to kind of show you the ropes, and somebody to ask questions to, and somebody to go to and ask questions, and we just feel like that's really important, so that people get the best use out of their own personal banking system. And ideally, if people really like that and they start loving how these banks are working in their use, and we like to think that you'll think of us when you're talking to your friends or family, and tell them about it too. So that's how we benefit, but you won't ever actually pay us a fee or a monthly anything for doing any of that stuff.
I see. So then how is my premium determined? Is that going to be, I know that I have to qualify first. So I have to be healthy, just like any, like insurance, right? You do have to qualify. You have to make sure that there's no pre-existing conditions, that you're not, that you haven't had anything in your background as far as your criminal record, driving record.
Yep, we're gonna ask all those questions. It sounds like you've already thought of all of them already.
That you hadn't had like a stroke or a heart attack
and
before.
Basically where we start at is, if you, Victoria, have given some thought to like what you would like to, or what you feel like you would like to start contributing or committing to growing your bank on an annual or monthly basis. And you're right, then we'll ask all those questions and we will make that request to the insurance company. Ultimately, they will tell us a yes or no, or, say, I want to start, contributing 20,000 a year to creating my bank. And then they may come back and say, yep, that's great. We're happy to do that. We've done the application. We've done this paramed exams. We've gone into the National Health Records database and, really looked at Victoria's case, and we're happy to, offer her a contract at that amount. Or they may say, oh, well, we've got this stipulation and this stipulation, and see, she's got type 1 diabetes and she's a smoker, so we're willing to offer her a policy, at $10,000 per year in premium. So I always tell people to ask for what you really want, and then ultimately the insurance company will determine that. It's rare that I have people that they tell them that they can't have a certain amount unless there's some health issue that like you or I or nobody could foresee was going on when they started, doing those blood and urine tests and that sort of stuff.
Okay.
So it's really kind of up to you, like if you've already given some thought to that, like, yeah, I think I really could do this amount, or I'd like to start, you're putting this much into a bank on an annual basis or monthly basis. I've got the budget for X amount or whatever. Have you already started thinking some of that through?
Yeah, I was actually thinking maybe if it's 12,000, so that way I can put in like $1,000 every month. For that. Okay, so I did also, I've done a little bit of research, and I've heard that you can actually have multiple of these. So do I just qualify one time for multiple ones in the future, or do I have to keep re-qualifying and doing the urine and blood test every time I want to open a new one?
Yeah, you do, unless it's, sometimes what, I'll just tell you, I mean, I would say, and this is myself as well, I started my first policy 14 years ago, but, my income is 3 times what it was 14 years ago. So, of course, I qualify for a lot more. And in fact, if I'm wanting to protect my family so that if I were to die, I kind of ask myself, well, if I died, would I want my children and my wife to live a lesser lifestyle than they do now? And it's like, how much do I like them? Or the same lifestyle, or would I want them to live an even better lifestyle, like leave a legacy behind if I died? And so the insurance I had at that time is not at all adequate to answer that question if I want them to have the same or better lifestyle in the future. So I've kept adding policies, a second policy, a third policy. Then I added one on my wife. Now I've got one on all my kids. So I've got about 8 different banks in total in my banking system, if you will. I didn't necessarily foresee that at that time, because 14 years ago, I couldn't predict the future. But most people I've seen over time find that their income does grow, especially over a 10 or 14 year, time period. And so it makes sense from a practical standpoint, and from the way the insurance company views you risk-wise, that to offer you more, insurance in the future, for sure. But yeah, most people will kind of start with one. And once they start utilizing their own policy and they meet with our mapping specialists, they really get a feel for how this works and see how it's working practically in their life. Like, they're like, oh my gosh, that's the one regret I hear from people, and really the only regret with these banking system policies is that, gosh, I wish I would have started sooner, and I wish I would have started with more. And so 90% of our clients, I would say, end up getting a second or third policy on themselves or somebody down the road. And I would say 70% of those do that within 6 to 12 months of starting their first one. So that's pretty common.
Okay. And they don't have to re-qualify again, right? They just...
Well, if they do that within usually about 6 months, they probably wouldn't have to. But given that, enough things can change health-wise that, especially if it's a significant size policy, they're going to want to go through that again. So yeah, I've had to, have the lady come to my house, and I am deathly afraid of needles. It's my wife. I have to do it at home, so I'm in a comfortable environment, so my blood pressure doesn't go through the roof like at the hospital. And I lay down on the couch. My wife holds my hand, and then they they take their blood, and anyways, it's just part of what I have to do to get what I want, and it's over and done with pretty quickly. So
Yeah.
not my favorite thing, I can guarantee you.
Okay. Yeah, that's good. Okay. Well, you got through it. So where do the dividends come from, Rob? Like, is the money getting put in the stock market and making money that way, and then I earn it and it's given to me as dividends? Like, where does the extra money come from to?
Yep. Good question. So there's two types of insurance companies. There's the insurance companies that are really big ones you've heard of. They're publicly traded stocks, so they're owned, and a lot of what they have to focus on is satisfying shareholders, and sometimes, unfortunately, they have CEOs and top-level executives that part of their pay structure is with stock options and so forth. And so there is a tendency and kind of they're badly incentivized to sort of increase the price of the stock and do certain things that may jeopardize the long-term future and stability of the company because of that. Does that make sense? Because if they can juice the stock price and they've got all these options, they can leverage those options and sell the stock and then just retire on this golden parachute and just be done. Meanwhile, that whatever happens to the company happens to the company. But the only companies we ever use for this banking system, and you can go back to Nelson Nash's book, Becoming Your Own Banker, that he warned about this and talked about this, that we only use mutualized insurance companies. And what that means essentially is that the policy owners with the company are also the owners of the company. And so most people are never going to, cut off their nose to spite their face. They're never going to vote, in board meetings, because when you own a policy in a mutual company, they'll send you the forms to vote on the company decisions and so forth. And you're not going to vote to do risky things or have the company do risky things that would put you in jeopardy or your policies in jeopardy. And so these are typically the most stable, conservative insurance companies, in existence. And in fact, all the companies that we utilize have been around for over 120 years, and they've all paid dividends every single year of those 120 years. So it's a pretty good track record when you consider that includes the Great Depression, 2 world wars, and every single recession and economic downturn that we've had, in the meantime. And so that also means, though, that as a policyholder in this type of company, which you wouldn't get if you were in a publicly traded company, we really get paid, 3 different ways. And that's how, we can start off in the first year with like a 6%, return. And by year 10, we're seeing a 200% return because we're getting paid in those 3 different ways. You have the guaranteed interest rate. So you're right. The money that, we pay in premiums, if the company's not paying out death benefits, they have that money in really stable, secure things like government bonds and things like that to cover that guaranteed interest rate that they're paying you. However, we also get paid through what's called a return of premium. And so what that means is that you're paying your premium based on the actuary's estimates of the number of people they expect to die every year. If fewer people die, which happens nearly every year because actuaries are inherently very conservative, so they overestimate the number of people that are going to die just to atone for the worst case scenario. And so when that happens, the insurance company will actually pay back or return the extra premium paid because not as many people died as was predicted. So you get paid that way. Then also, because you're also a participating owner of the company as a policyholder, when the company does well and is profitable, you also get paid in the form of dividends. So like I said, you're getting paid 3 different ways in these mutualized insurance companies that pay cash dividends to their policyholders.
Oh, perfect. Okay.
So pretty exciting, pretty unique from that standpoint. That's a point a lot of people just don't know, never heard of, and didn't know anything about.
Yeah, because that's what I was thinking. I'm like, where is the money? It has to come from somewhere. So Rob, are you a licensed insurance agent?
I am, yes.
Okay. So this is just the product that you decided to actually, go after and that you provide and pretty much sell, right?
Yeah, I mean, the whole life insurance is the only product that exists that you can really do this banking aspect with. So, I mean, you might want a term insurance policy, or you might want some other kind of product, but we're not the ones that are going to provide that for you. We don't sell car insurance. We don't sell homeowners insurance, health insurance, anything else. This is all we do. This is what we focus on in helping people put together these banking policies.
Got it. And then, so when you pass, Rob, it all stops, or how is there a way that just like these, like the original families, right? Like the Rothschilds and all these other
the Rockefellers.
Yeah,
so what they've done is, and you can do that at any time, take these policies, put it into a certain type of trust, and then part of the articles of the trust say that when this person passes, that part of the proceeds have to, there's no choice, they have to be used to buy these same types of policies on the next generation. And that's how you ensure that generational wealth continues, forward, instead of getting squandered by the young people that come next or whatever.
Yeah, so there's a stipulation to where it can only be towards investment properties or, all that. And then they still have to pay back into it again, right?
Yeah.
So
it all stays inside the trust and continues on.
Okay, got it. Is that how you structure yours, or it just stops when you're done?
Yes, well, a couple of mine have outside the trust, a couple inside the trust with those, exact stipulations. So my kids, that's part of it is, if I died now, they would be able to access a certain amount of the death benefit, a certain amount of the death benefit they wouldn't be able to access till age 30. Hopefully they're more mature, and a certain amount of it would be required to purchase more cash paying, dividend paying whole life insurance on themselves.
Okay, got it. So you pretty much pay everything from your bank, right, Rob? So then that way you can capture all of the dividends. Is that like the true idea of everything, right? Like you don't really.
Yeah, I'm not there yet. So I do about 60,000 a year in premium deposits into my banks, but that's significantly below my income. So I'm still kind of on the ascension, working my way toward, like Nelson Nash said, where you get to a point at someday where your income exactly equals the amount of premium that you're paying every year. Now it's kind of like that thing we're aspiring to. It's like becoming, more Christ-like. I don't know if any of us will ever, be like Christ, but it's something to work toward or aspire to. Does that make sense?
Mm-hmm. Yeah. Okay. So, what was my other question? I totally forgot. So, Rob, am I able to share this with everyone that I can speak to, just this information? Is it okay if I share this with
absolutely.
I'm assuming yes, that would be nice.
There's no point in keeping it secret. Like I said, my first degree were in accounting and finance. I worked in public accounting. I prepared tax returns. I did audits on companies. I was a financial analyst for the Florsheim Shoe Company downtown Chicago. And when I first heard about this, I was like, no way, this can't be true. And I'm like, why have I never heard about this? I was almost indignant with my education and my work background. I should have already heard about this or known about this. But I used my knowledge in that to try to poke holes in it and tear it apart and try to prove why it wouldn't work and why it wasn't true. And I just found that it was the opposite. Actually, everything they were saying was completely accurate. And then I was even more indignant, like, well, who's trying to hide this from me and why? And that really kind of ticked me off, because I figured out, if I didn't know this stuff with my education and my background and work experience, I'm pretty sure most Americans don't know any of this stuff either. And so that's what we're doing at the Money Multipliers, trying to help as many people understand this stuff and take back control of their own finances by creating their own bank and putting it in protected places and, putting it in tax-free environments and trying to get the government, out of our life as much as we possibly can.
Yeah, oh yeah, absolutely. Because I've heard of it. I read a little bit about the book that you mentioned. So Rob, you have to be at least 18, right, to be able to start this?
Yes.
Okay.
I mean, if you had your own policy, like I told you I do, I've got enough death benefit in mind. Now the insurance company will allow me to insure my minor children because of that.
Okay. Got it. Yeah, because that's what I did with my children as well. When they were like just a few months old, I started life insurance for them, and it's not as much because then it can't surpass like what I have, but
what you're insured for,
yeah. So that's awesome. That's great. I think those are all of the questions that I have, actually.
Okay, all right. You had some really good ones too.
Thank you.